Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, May 11th. My gosh, where has the time gone? Here we are almost in June. So let's go ahead and get there. So we welcome all of you here today. We got Brent Morse with us in the chat. Say hello, Brent. We got with us JP. Yeah, right back at you, JP. Speak the truth. It's always a good thing. Fez, aloha, Scott, back to you. And Silas, GH. Yes, GH is here, so we can get started and also Ricebird and many others. Welcome to all. Now, just real quick as we get started, hopefully you had a great Mother's Day weekend. My gosh, was it busy, but it was productive. So hopefully you enjoyed that, and yeah, it was great. Hopefully it wasn't a Mother's Day; it was a Mother's Day weekend. Anyway, so just real quick as we get hopping here, remember that our focus here today, I want to kind of just show you just really quick about 3 weeks ago, we had a class on, and let me send this to you. Okay. Let me just click on that again. That way it'll start from the beginning. And if I do that right there, I sent that in the chat. So really 3 weeks ago, we talked about 5 main dip entry setups. I want to highlight one or two of those setups that we talked about of the five here today. Okay. Now, sometimes you kind of just need practice. Just because you saw it doesn't mean you know how to apply it. And I want to talk about one or two of those setups. I don't know about you, but the last couple of days, it's been very interesting to watch like one or two of the five main setups. And if you weren't comfortable with those one or two out of the five, you kind of feel like you miss some opportunity. So I want to kind of make sure that's not us. Now, just real quick as we get started here today, remember our information that we talk about here today will be done for general informational purposes only. Also, remember when we talk about, let's say, or if we bring up options, remember that options carry a high level of risk, not suitable for all investors. When we talk about our examples, we will do those in the paper money software application. You might do yours on schwab.com or the web-based version. That's fine, sure. But we're going to use the software. And also remember that also investing involves risk, including loss of principal. Now, we'll talk about these two main setups that we've been seeing as we look at a couple charts. Let's go out there and look at the market right now. And let's kind of just, and by the way, before I even do that, did anyone notice anything this morning, like when you woke up? Okay, Gary, you're not allowed to answer because you tweeted on X. Anyone notice any charts today that kind of stood out just a little bit? And I just want to kind of say in terms of prices, right off the bat. Well, let's take a look at this. So as I'm getting some answers, I'm going to pull up the SPX. Let's start here. We'll circle back to coin in just a second. First off, if we look at, let's say, the SPX, what do we got? The SPX, are we at a brand new high? Yeah, we are a brand new high. So it actually was the highest point, 74.26. I do want to kind of make mention. Remember what we said on Friday with Kevin is the investor does not have to buy individual stocks. They might just buy a group of stocks. The movement we've seen on the SPX from low to high in the last 30 days or 6 weeks has been 17.46% if you're counting. The movement on the NDX, and by the way, there's no resistance in sight there. If we go back to the NDX real quick, again, just buying the index, and again, nobody has to just buy stocks, okay? The movement there in about the same period, about 29-ish days, 28.2, just the index, or a product that's trying to track the index. You can't buy the index. We're talking about a product that is tracking the index, like we talked about on Friday. Now, the one is when we take a look at the Dow Jones itself, that is the one that we talked about last week when we talked about correlation that has been it's lagged. If we kind of said, is there a potential catch-up trade? Many investors would still say the Dow Jones. Now, remember, we talked about, hey, if you could look at the US dollar, might that be influenced by, or might that have an impact on the some of the precious metals, oil, and so on, and the Dow Jones itself? Sure, that is still loading up. Now, this is not Friday's class, but if it was Friday's class, maybe an investor might say, geez, maybe the investor's going to try to buy on a little bit of a dip in the price here, where that might try to uh, go more in line with what the Dow, excuse me, the S&P and the Nasdaq are doing. The Russell, just real quick, when we take a quick look at that, you already did see actually a one candle day down, red candle, and you've been seeing one green candle, two green, second green candle. So what you're now going to kind of notice is this same pattern. The pattern that we're actually kind of talking about and kind of just making sure that you're comfortable with is one red candle and then fires right back. One red candle fires right back. One red candle fires right back. How many of you, and just be honest with me, and if you say, James, it's me, I'm just going to say it. Just say it, okay? If you ever see like moves in the market where you only see one, two, or three red candles and then it goes back up, how many of you feel like a little shy to consider a potential entry? Just be honest with James. I'm not going to judge you, okay? Brent might judge you, but I'm not going to judge you. I'm just joking. Now we got to do that. Just make sure we get Brent in here. All right. Okay, good. Now, what we want to do is if we kind of said, hey, which prices did we actually see this morning right off the cuff that was a follow through to Friday? Well, number one, silver shot to the upside. I mean, you gauge it for yourself. We also saw, for example, copper shooting to the upside. Now, again, we're going to talk about some individual names in just a sec. Matter of fact, if you're a really nice person, I bet you are, why don't you give me some of those names? Because I know you saw that, okay? Which names from silver, gold, copper might you consider? Now, when we actually take a look at this, if we're kind of seeing, let's say, those go up, we talked about on Friday how the US dollar was kind of sitting in what type of price pattern? Well, that type of price pattern was really the descending triangle. Now, if you kind of look at things, and I won't even say it, things that are counter to the U.S. dollar, you fill in the blank. Those started to tick up. Okay, you saw that. We see in the precious metals. It's not just only in the precious metals; it's in other areas as well. And the idea is, could the U.S. dollar actually drop? Now, in the world of getting started, in the world of trading with technical indicators, does that mean that trend is not included? Of course not. Does that mean price patterns are not included? Of course not. Okay, those are included. Now, when we talk about indicators, we're talking about moving averages, oscillators, and so on. We'll bring those up, relative strength, and so on. Now, the one I did not make mention of is gold, but I think we could throw gold in there. Gold did not go up as much as, let's say, silver or copper, but keep an eye on gold as well. Okay. Now, if we take a look at this, and I want to kind of show you this, let's go back to this and let's get into our example. So first off, if you've ever, and I want to kind of, so on this, let me send it again, just make sure you have it. I want you to study this out, okay? Now, there was a comment that was in the chat, okay? When someone sees big green candles, they're maybe a little hesitant to get in. Okay, good, okay? So in number 3 of the 5 that we talked about, that is where the investor's looking for what's called S1, support 1, or support 2, okay? Looking for some shorter term support levels. Those support levels are not just moving averages. They're not just horizontal diagonal supports. They can even be in the areas of the midsection of the large green candles or the open of the green candles. No step 3. Now, if you said, look, I get these really big up days, green candles, where's the potential entry? Well, that's where you get into step 4 and 5. That is what we're going to talk about here today. Now, speaking of that, let's kind of get into some of these. And I want to go back to just a couple names. Now, remember the stocks that we talk about, we're looking at these like Dow stocks, things like that. And so this is a part of the routine. So if we actually go down to this just real quick, bring up the Dow Jones, it'd be hard not to see, okay? If we brought up the Dow Jones, you got Honeywell at the top. This is ranked by percentage. Honeywell is actually getting a little push. We'll maybe bring that up in just a sec. The second one we also see is NVIDIA. And you're going to see that this might be what the gentleman is talking about, where you get these large green candles and you're unsure where the entry setups could be. Well, just a real quick, since we're on here, and then we'll go back to Honeywell in just a sec, the midsection of that, so if we get this big green candle right here, the midsection might be the first support level. Now, if we got above the moving average, might someone set, and we talked about this, in step number 2. Step number 2 was what? Buying stocks, or trying to, buying stocks 1 to 3% above the moving averages. Well, what did we see after the big green candle? Well, how far do we get off the moving average the very next day? Wonder if you set a buy limit order, buy at this price or lower. How high was that? It was 0.5%. Even if we went to the open price, that's not going to be more than 3%. That was 1.5%. So that's step number 2. Okay. So what was step number 2? Step number 2 is looking to consider buying stocks that are 1 to 3% off a support level. That next day you saw it. It did not come back down to the step 3, which is looking to buy the stock if it came down to the middle of that. We go forward to the very next day. How high was that? Let's double check. Okay. Draw it up. We're using the whole moving averages. That's 4%. That would be too high if we're trying to use that setup that we just talked about. Now, what do we see today? Well, what we saw today is today's open price. Do you see it? Type it in if you see it. Well, didn't it look like it came right down to the middle? Someone says, I don't know where to get in. Well, that's exactly what we talked about. Step number 3. Okay. Went right down to the middle of today's Friday's candle, and you saw that was pretty much the open price. Now that open price was at 214. Now when you do like the S1, middle of the green candle, you're trying to do like a buy limit order, buy at this price or less. Okay. Now why am I bringing this back up? Because I'm not that naive to believe that just because you saw it once, you totally get it. Okay. I'm not that naive. I mean, gullible, sure, but maybe not that gullible. Okay. Now, I don't have anything to say on NVIDIA besides we have that position, I think, 3 times over. Let's go back to just real quick Honeywell. I want to go back to Honeywell because this is going to kind of fall right in line with what we talked about. Now, when we take a look at something like this, when we talk about the 5, how does this relate? Well, number 1 is, step number 1 of this was old resistance becoming new potential support. Now, when I look for support or resistance, I'm looking for the last, let's say, 2 to 3 weeks, the most immediate short term. So if we were to draw this up, and by the way, this is going to be right in line with what we talked about, maybe short-term support, 208-ish. Where do we see an area of resistance? Well, it's probably right around about, let's say, 214 or so, somewhere right in there. Now, if I pull this back up, what you're now going to see is, could this be step number 1 that we talked about? Old resistance turning into new support. Well, how long you go back? I said that. Go back the last 2 or 3 weeks. That 214.48 has become a pretty good level. Now, when we talk about price entries, okay, I want to go over here on the right-hand side. We get a big green candle. Now, we just went over that, right? When we get the big green candle, where might an investor set an entry? Number 1, right in the middle of it. Could the next day could that have hit the entry? It could have. Now, James, the very next day it went lower. Yes, it did. And what you're going to notice is it would have been pressured. Now, where might an investor have set a stop? Well, if they're trying to get on like a higher low, they could have maybe set the stop at the tightest, at the open of the green candle, less 2 to 3%. So it would have been underneath 212.85, less 2 to 3%. Wouldn't have stopped out, but would have been pressured. Okay. More than to be a little bit more realistic with the stop, they might have said, look, I'm going to set the stop underneath 2.8 and try to give it some movement. We talked about that last Wednesday on stops. How tight is 2 stops? How tight is too tight? And if we take a look at this, you're going to now notice that we see the red candle, 1 down day, 2 down day. Now, on step 4 of 5, we talked about call hold, okay, close above the high of the low day. And we said where investors tend to miss the entries is when it only pulls back for a brief period of time. Everyone and their mom and dad, they're waiting for a deeper pullback. Look, the investor who's riding momentum doesn't want a deeper pullback. They want the stock to shoot to the upside. Do you get that? Okay. Not looking for a deeper pullback. If the pullback is deeper than 3 days, it's leaking out the momentum. We're not trying to leak out the momentum. We want the balloon to shoot to the upside. Okay. The balloon being the stock. Now, if we see it only pull back red candle 1, red candle 2, and then all of a sudden, here we are. Do you notice anything again? James, it looks like we're right at the middle of the red candle. La la, the pattern is repeating itself. Okay. Now, if someone said, James, I had a buy limit order at the middle of Friday's range, could they have set that up? Sure. If someone said, no, James, I actually didn't do that because I didn't see that. I was looking at all these, I was running 52 different searches. Why? Why? Okay, what was wrong with the Dow list? What was wrong with the NASDAQ list? What was wrong with the S&P 100 list? Why? They're right in front of you. Okay, opportunity. Now, the thing is, you can see them. You got to be able to identify them. Now, what you're now going to notice is on the chart, there's a little green dot there. And that green dot right there is signifying close above the high of the low day. Now, here we go. Trade number one. What we're going to do is we're going to buy it. Now, again, this is where someone says, well, how do you know it's going to go up? We don't know it's going to go up. That's why we actually set a stop. That's why we position size. The investor is in the business of taking risk. Now, if you did not go back and watch the class, now I'm not going to go back and hit this, but the one thing I want to make sure that we are crystal clear on, okay, is going to go back to this right here, which is stop. Make sure you're clear on stop, save time. Now, I'm not going to go back and hit that because I'm just going to do it faster. Now, I don't know if you know this, but I'm going to go send that right there. By the way, if you're watching this on recording, I'll put these two classes in the recording so you can actually just grab it off the description. Now, speaking of this, let's go to work. So now what I'm going to do is let me just bring up a little quick cheat sheet, if you don't mind. And what I'm going to do is I'm just going to use this as my little sheet of paper. I'm not going to completely recreate it, talk about it. I'm just going to rerun the numbers. So number one, trade number one, we're actually going to go back to this Honeywell. And with this Honeywell, what I'm going to do is let's just kind of write this numbers in so you could follow along. So if I look at that price, 212.07. Now I hear someone saying, how do we know it's not too high? Bring up those envelopes. Well, fine, I'll do it for you. Okay. We bring up the envelopes and say, is Honeywell too high? Well, we can't say that. Honeywell, if we look at this, we're above the 10-period moving average, the light blue line. We're not even at the yellow. Okay, I can also hear someone say, okay, I feel better now. Okay, so one green candle probably doesn't knock up through the yellow, the red, and so on. We're not even at the yellow yet. Okay, so there. We just wanted to make sure we're crystal clear on that. So 210.07, this is going to be the entry. When we look at the support area, let's go back the last 2 to 3 weeks. What do we see? I'm going to go back, let's say, to the middle of this range, which is really right around 211.62. If we actually said the RPS, risk per share, that's, or I could say stop right here. That stop, if we said, what is it? Less 2%. And now we bring up risk per share, RPS. And it's really the forecasted risk per share, okay? We don't know if that's going to be, because that's a stop does not guarantee where the fill is. It's going to be 12.68 per share. Now, when we look at that on a percentage basis of the entry price, it's 5.7%. That number tells me a lot. It probably tells me that the stop is not probably that too tight, okay? Now, you could also go back and double check the ATR. Now, if we take a look at this, what I'm going to do on this chart, let's go back to the paper money count, and I'm going to bring up, let's say, Honeywell. Now, notice, did we run a search? Nope. We just kind of used the Dow Jones list to say what is starting to actually go up. Is there some potential setups right in the Dow list? Now, we're going to right-click on the chart, buy custom with OCO bracket. What do we know first? Well, we got the price. We got the target. Not yet. We got the stop. Yes. Where is it? 207.38. Okay. Now, what do you think the oscillators are doing? You would sure hope that if actually that price is, now, by the way, one thing we did not make mention of is notice how the price is just kind of hugging the moving average, the 10-day whole moving average. Okay. Something to kind of notice there. That's also kind of telling us where investors have been comfortable to buy the stock historically off the support level. Now, if we were to look at this and say, well, where might be a resistance, a target? Well, the resistance or target might be in the vicinity. Now, this is classic, right? Where's the old channel? Well, you got a resistance here. Now, I can hear someone say right now, okay, Yeah, I'm going to wait to see what's going to happen. Okay, yeah, go ahead. Okay. The investor says I'm going to wait to see, and then it breaks out potentially, and now they're going to say they're too late. Be very careful about that. If you go up and make a high, okay, the highest chances to make a higher low. Okay. And once, if we break inside this old channel, and by the way, if we have the market going up, if we have the sector going up, it can push on some of these stocks that are right up near resistance, and all of a sudden it's not resistance anymore. Okay. Now, if we said an area of resistance, next level, we might say 236 and change. Okay. We're going to click on the pool balls, go to percent. And what I'm going to do there is, let's say we use, now the net lick is at 48. So again, we're kind of using that 10% rule of thumb. Let's say we did 48.50. Okay. Now, if I did 48.50, how many shares is it going to give? It's going to give us 22 shares. Okay. Now, the comment from was from Ira is, do trend phases play a role at all for buying the dip? I feel like you know the answer to that question. Now, let's go back to this just real quick. Let's bring it up. Now, where is that trend phase? And I'll send you the package of charts here that we're using. Think of this as the investor's toolbox, okay? So if we went back, let's close this down for just a smidge. And so what trend do we have? Well, what does the light green color tell us? Well, that light green color is showing us that we are in trend number 2. Price above the 10-day exponential moving average, but not above the 30. Now, is trend 2 bad? No. It's literally a signs of price reversal. Okay. Now, the common denominator in all the examples is the price is above the shorter term moving average, whether it's whole or exponential. It is. So does the trend candlesticks have anything to do with the entry setups? Sure, absolutely. Okay, where is it right now? Trend number 2. Now, if I actually went back to this just real quick and I pulled that back up, let's kind of bring this back up. So trade number 1 was Honeywell, entry, target, stop. Remember how the stop works? If it goes at that price or less, sell the stock. Going to go confirm and send, and there it is right there. Okay, now, Stay Gold actually says weekly trend is not trend 2 yet. Well, we're not against looking at the weekly chart. We're not, but we're trading off the daily chart right now. If you said, I would like to see that weekly chart go green first, it's fine. You're just looking for more confirmation. We talked about that last week. Confirmation isn't free. You wait for that weekly chart to go green. It just means that it might be, let's say the stock hypothetically went up to 230, 236. Before the weekly chart goes green, okay? So you got to ask yourself is, what do you want to see? If you're looking for the weekly chart, you're saying, I want to see more confirmation. I'm okay with not buying off the bottom. However, there's a lot of people that do like to buy off the bottom. They like a good bottom, okay? Now, any entry, there's risk, okay? Send the order, and there it is right there. Now, let's go back to this just real quick. I'm going to look at this. Last week, we talked about an example of, let's kind of talk about another bottom. Well, actually, 2 of them, okay? Let's go back to MSTR for just a moment. You guys remember, guys and gals remember this one, MSTR? Now, remember when we kind of talked about some of these stocks that were trying to reverse off the bottom? Let's take the comment of like looking, this is here, we're looking at the daily chart. Let's go just real quick to, let's say now, by the way, what is this showing? It's showing us right there that we have 24 shares with a target of about 198. Now, we're pretty dang close to that, okay? We might even adjust the stop up, the target up. The stop here is at 166. So first off, for just a moment, so much we could talk about there. But if I went to that trend chart and said, what trend are we? Just to follow through on the question, what do we have? Well, the trend, going back to the two main questions, does the trend candlestick chart have anything to do with the entries? Well, I don't know if green's your favorite color, but it's been a lot of dark green on this chart, which means prices above both moving averages. We're not in the area of resistance, keyword is yet. Now, why didn't the color of the candles turn orange? Well, it's because it has to probably for about 4 or 5 days or so start to get an area where it more consolidates. If it goes up to an area of historical resistance like it did here, like it did there, like it did there, like it did there, it probably takes a couple days to show that, hey, we're consolidating. You're typically not going to, if you make a brand new high right there, it's not probably going to show an orange color candle, meaning price above both moving averages, at an area of resistance because we're hitting resistance. It's looking for consolidation. And that consolidation typically happens over about a week of time. Now, what do we see here today? Now, if you said my favorite candle is a hammer candle, well, we see a pretty good hammer on the trend candle. I'll share the charts in just a moment. Now, if we go back to, well, what's it showing on the weekly chart? Well, the weekly chart, if we pull that up on the weekly, and let me delete any of these lines so we can only see the candlestick charts, you're starting to see that crossover, okay? And you're going to see that the green, light green was just what we talked about, which is price above above one of the two moving averages, namely the 10. Darker green showing more confirmation, price above both, okay? Now all of a sudden we're starting to see the moving averages pinch. Now, did you see any trades in the last 6 weeks where the moving averages were pinching and then they cross and then you said, my gosh, I have like remorse, okay? Regret. Okay. Now, here's it. You don't know which ones are going to go up. So it's kind of like the investor is looking maybe at a couple of them and they're seeing which ones are going to go up, okay? This is not telling the future. This is just showing what's the setup. Is there a setup? Now, what I'm going to do is going to go back to this chart. And first thing I'm going to do is we're going to raise the stop. Now, we already have shares of this right there. I'm going to raise this up a little bit more to like 250, okay? Now, there's an asset class that we've been watching that is still grinding up, okay? The only thing I'm going to do to MSTR, since it's already in the paid money count, we're going to raise up the stop. We moved it up to 245. If we did not have a position, okay, show me on this where the entry setup recently was. Well, I mean, if can you see it? We should, okay. Which day? Number one is we see the close above the high of the low date right on Friday. Now, if you said, well, prove to me that it wasn't too high on the moving average envelopes, I'm coming at you. Second, we went right back down to the midsection of the green candle. Dadgummit. That's how it feels, doesn't it? It just like, my gosh, I didn't even know it was there. How many times does this play out over and over again? And the investor just sits there and runs another search. Look, there's a really good chance you don't need to run another search. The opportunities are right in front of you. But James, don't get upset. Oh, it kind of does make me upset because I wish someone would have taught me this. And so the biggest thing is if we said, okay, entry was maybe on Friday, let's double check the envelopes, or even today. Now, when I go to the envelopes, show me on those envelopes, how high were we on Friday? Well, the answer was we were we started off at the 10-period moving average on MSTR on, let's double check the date. Okay, yeah, on Friday. So on Friday, we were right at the 10-period moving average, which some might call it support. The yellow line is 3% off the 10-period moving average. The red line is 5%. Could there have been some opportunities for a bounce entry right in there? Many investors are probably going to say yes to that. If we went down today and said, okay, the investor had, like, say, maybe a buy limit order right in the middle of that candle, which was what entry setup? The answer is setup number 305. Where was that today? We were with just a little bit off that 10-period moving average. We were below the 3% envelope line. Are you starting to kind of sense here what I'm laying down here today? It's being able to recognize, having the skill set, what are the five, and then recognizing them quickly, not slowly, quickly. Now, if I came to this and said, where are we now? Well, we're at the 7% line. Well, James, why didn't you get in early in this example? Well, we waited for the class. Now, not every trade has to be a stock example. But let's say the investors say, look, I want to trade something that might be more probability based. Now I'm going to do this in two aspects. So number one, so if someone was trying to say the stock position, there's been stock trades in the last Friday and today. If we're talking about today and someone says, look, it's a little elevated currently, might I do maybe a paper trade on selling the put or something like that, where the volatility is maybe a little high. Now that volatility is at 80%, mama, uncle, okay? So we know the higher the volatility, the bigger the premiums. Now, because this is also because we already have the shares as well, okay? But if I came down to this and said, you know what, I'm going to go back to this delta column and I'm going to kind of look and see, is it possible maybe to sell a pet, maybe out of the money a little bit? And let's go like 14 strikes. I just want to see what's on the table here. If I went to this, and so when we sell the put, we're really saying, look, we want it to go up, but we also want something to try to capture time decay. And I want to kind of also try to play maybe a contraction of volatility. Now I need everyone to say volatility. Okay. So if the price goes up, could the volatility go down? Second, time decay. Say time decay. Now that time decay, you're now going to notice is we're going to click on the 178. Now, if I click on the 178, click on that 960 right there. Got a funny story to tell you, okay? 960, sell -1. Now, if we sell -1, what's that saying? We're agreeing to buy 100 shares of stock at 178 from now until expiration. Now, some people say, well, why do you do options trades kind of something more often than not? Because they're running out of money. It's a simple answer, okay? When you got $48,000, you could chew through that in the morning, okay? Now, I'm going to go confirm send. We're in the margin account, okay? And I'm not going to set a buyback on this. That way we can kind of follow the trade along. And you're now going to see what is the premium, which is the max profit. Max loss is if the stock goes to zero. If it went to zero, think that through. And now you're going to see the cost of the trade, including commission. Notice the commission, 65 cents. Send the order. Now, here's the deal on this, okay? When I go to the charts, I'm going to also go back to does anyone, yeah, thank you, Luke, DK. Okay, so glad appreciate that. That makes me feel good. Volatility. Now, good. Now, here's what we're going to do. Can anyone name another stock that might be related somewhat to MicroStrategy? It might be in your pocket. A coin, okay? Now, so that trade filled. So second trade filled. So let's go back to this. We're going to go to coin. Now, if we looked at coin just real quick, here's what we got. Now, remember, of the 5, okay, let's recap these. First one, we talk about old resistance being new support. Well, I mean, so first off, did we get through the earnings? It looks like we did right there. Now, how many of you say, well, I'm going to wait until after earnings to get in? Well, we're after the earnings, okay? Now, if you take a look at this, is if you're a fundamentalist, which just really means show me the money, okay? The estimate was 36 cents. The actual was 149. Interesting. Price went down a little bit, and now the price after that has pressed to the upside. Where's resistance? Resistance is right around, let's say, give it to me. Give me that trend line. That trend line, that horizontal line price level is right about 206. Now, what type of price pattern do we got on this? Well, diagonal support right around here. Now, every time do we have to complete the apex of the triangle before the breakout, or could it be showing an appetite of investors who are trying to get in? You better believe some people are trying to get in. If they really think it's actually, maybe they think it's going to go to the upside, they might not wait until it goes to the apex of the triangle to finally get the breakout. Now, if we broke the resistance at 206, path least resistance, 240. How do you know it's going to go up? I don't have a stinking clue, okay? And as soon as you realize that no one knows tomorrow, because, well, I mean, you might say the trend looks good or whatever, there's probabilities, but we don't know what's coming tomorrow. Never will, okay? We don't know the orders ahead of time, who's going to be buyers and sellers and how much. We don't know. If we knew, we wouldn't position size, okay? Now, what I'm going to do on this is, now if we said, okay, hold on, what of the five, which one is this? Now, could we say, now number two was buying 1 to 3% off the moving averages? I don't know about you, but there's this morning right here. I mean, this was right at the moving averages. Now, we could also say with this, James, did we come down? Oh my gosh, throw in the towel. Was this another example of coming down, kissing the midsection of the green candle again? I don't care how many times you've seen it. I want to know how many you practiced. How many? Now you're probably thinking, well, James he set these up and he's really trying to hammer down a point. Now I'm just pulling up regular charts, just like we do every time, and going back to the same five things that we overlook. So here we are, come down to the middle. Now remember, what would have happened in the middle of the day? In the morning or the middle of the day, the price would have been down. Joe or Jane investor would have said, oh yeah, failed breakout. We're seeing some weakness intraday, red candle. Now remember, what have we taught? Well, when we get the red candle, the investor doesn't care about the red candle if we're above the moving averages, if we're above the support level. Okay? Now here's the thing, if you bite on that, you get faked out, you miss the opportunities of the 5 dip entry setups. Now, I know you're thinking, God, it would have been nice to get in right there. Well, here's the thing, no order, no luck. Okay? So now what we're seeing is, now here we are. Now, by the way, was Friday also close above the high-low day? I mean, just not to kind of press on that wound right there. I think that was closed above the high-low day. Second, here's the midsection. Close above the high-low day was step 4 or point 4. Okay. Today, we actually see that was really that step 3. We could even argue that it was also step 2. So you had 2, 3, and 4 all within 24 hours of trading. Now, here's where we are. Where are we now? How high is too high? Well, let's bring back the measurement tool. Well, so if we're looking at this, now remember, what's the light blue line? Okay, the light blue line is your 10-period moving average. Now, don't you love how we use the same tools over and over and over and over and over, but we know how to use the tools? That's the difference. It's not having 5,000 different tools you don't know how to use. It's knowing these hammer, drill, crescent wrench, okay, Phillips head screwdriver, and actually knowing how to use them. Okay, maybe you feel like that's a revelation. Kind of came to that realization myself. It's not knowing having all these different tools if I don't know how to use them. Now, what you're now going to see is the 10-period moving average, 3% line, 5% above the 10, and the white was actually 7%. Now, remember that this might alter someone's strategy. Number one, they might say, if I'm going to buy some shares, I'm not going to do a full position. Dollar cost averaging, we hit that quite a bit. But if someone says, James, I kind of want to trade something where we kind of have the probability again, and I want to kind of do something where I think the price is going to stay up above a certain level. Now, when I say something like that, it kind of, smell that? It reeks like cash secured put. It reeks like short put vertical. Now, speaking of short put vertical, now, why would someone do a cash secured put versus a short put vertical? Does anybody know the answer to that question? Well, the short put vertical is where you're saying, look, I'm going to sell the put and have downside protection. The con, you don't get as big a credit. The con, you don't have as low as downside, the break even. The pro, you have built-in max loss that doesn't have to have the stock go to zero. But if you said, nah, James, I'm selling the put by itself. Well, you sell the put by itself, I mean, you risk it potentially all the way down to zero. If you don't buy a put below, the break even is lower, the premium is bigger. Oh, you only hear what you want to hear. But you got to remember is the risk is, hey, the stock could go to zero. Now, could it? It could. But the biggest thing is what I'm going to do in here to try to take that off the table or take it off the table for a duration of time is we're going to sell. and we're going to go to vertical. Now, this is not the typical vertical you're thinking about. The put that we're going to sell is the 195. The 195 has a delta of actually 30. If we look at this right here, is if we got somewhere in the middle right there, let's say 1090 or so, we're going to buy a put to the downside. The buy a put with the downside, we're going to look at the delta of 10 or less, 160, 155, 150. I'm even going to go down to the 150. Now, the lower you do that, the bigger the risk. Do we ever think the 150 is going to become worth something? It's not likely, but we're trying to take zero off the table if the stock went to zero. Think of the put that we sell as the obligation to buy, and the put that we buy, which is the right to sell. I'm going to repeat. The put that we sell, that's the obligation to buy. The put that we buy, the right to sell the shares. Okay? Now, when we do this, if I come back in, we're now going to see what's the credit, $915. $915 gives us that max profit, $915, max loss, spread minus the credit, and we see the cost of the trade, including commission, $1.30. Why? Because we're buying the put on top. So trade number 3. Don't you just kind of love it how we're just pounding these 5 same setups? And it's just kind of interesting to me. Now, we're not bringing up new things. It's like, well, what's wrong with the old? Okay. Now, I'm going to come back to this and go send. Okay. Now, I'm just going to pick one more. Oh, yeah, James, you're just rubbing it in. I would never do such a thing, ever. Okay? I'm just having a little fun with you. If you're not laughing, I feel offended, actually. I really do. Now, if I take a look at this, are there any other stocks that might be kind of showing maybe a little resistance, trying to break or potential bounce or go hold? Now, we know that if I bring up, let's say, the Dow Jones, okay, what I'm going to do is I'm going to bring up the Dow Jones, and we know on the column heading, so here's the Dow Jones stocks. We're on Market Watch, Dow Jones. We know on that column heading we can see which ones have potentially closed above the high of the low day or trade above the high of the low day. Stocks like what? Stocks like Visa, stocks like UNH, stocks like Nvidia, stock like Cisco. We also see a stock that GS, if that loads, okay, that one should also be showing as well. When we go back to the chart, you're going to see that on that one, GS, that one is showing on the chart. There's your dot, okay? So on the Market Watch, that should show as well. So if I went back to the 5 and said, okay, well, how does this relate to the 5? Well, that would be step 4. Going back to it again, if we looked at this and said, well, what other step, or is there one? And by the way, that brings up a question. Do you have to have multiple steps in a row? You don't. It'd be one of the 5, okay? Now, if we look at this, it would be step 4, close above the high of the low day. It would also be step 2, that it's kind of just bouncing off the moving averages after only a 1 red candle. Okay? Now, if we take a look at this, what might be an area of resistance? Well, this kind of goes back to the area of the resistance we have is right around 953. You got to ask yourself the question, why would someone be smashing the stock, buying it, and ramming it up to 950 if they didn't think the price could get above it? You got to ask the question, okay? I mean, maybe they call it sometimes foolish money, okay? Investors that don't know what they're doing, they can't see resistance. Maybe, okay? I don't think there's a whole lot of foolish investors. I think there's a lot of smart investors that are saying, look, they're seeing the pattern. They're seeing on the right-hand side, maybe like a cup pattern. So I'm just going to kind of flag this one and say, I think many investors might say, James, I'm going to see a setup today. If it gets much higher than 950, some investors might even have a buy stop at or above, or buy stop limit at or above with a cap on that entry. So again, I want to make sure we're getting practice on these 5, because if you look in the last 2 weeks, 3 weeks, there's been a plethora, okay, of stocks that just hit the same 5 points over and over again. but it doesn't mean the investor is confident. So today's goal was becoming more confident in these 5 dip buying setups. Now I'm out of my time here today. Did you like kind of going back and make sure we get practice on the 5? I would love nothing more than if I met you one day and you said, my gosh, James, I know those 5 inside and out. Matter of fact, I could teach you something. I would sit down and listen. Okay. So I want to make sure that we get practice on these. Now, also remember that we got Cameron May coming up next. Don't forget to subscribe to the Trader Talks channel. Thanks to Brent for answering those questions in chat. I'll put on the resources that we talked about in the description of this video. Now, remember, with what we talked about, it was done for example, illustrative purposes only. Cameron May will be coming up next with cover calls and short puts. I'll be in this week, Tuesday and Friday. I will be out Wednesday and Thursday, and Len is in charge while I'm gone. Okay, I'm joking. Len's a good man. And I always kind of tell him when I'm gone, Len's in charge. Okay, with that said, thanks for having a little fun here today and learning as well. This has been the class on trading with tactical indicators, and I will post who will be teaching those classes in my stead. Thanks so much. Take care. Stay tuned for Cameron May coming up next.